Okay, folks, welcome to this UK House Price Index for Zoopla. So, according to Zoopla, welcome Instagram viewers as well. So, this is the executive summary according to Zoopla for the July 2023 figures. Quite interesting reading. We're going to share some information all the way through here. This is going to last about 30 minutes, but it's a great insight into where Zoopla see the housing market, as opposed to the Office of National Statistics, as opposed to the Nationwide, as opposed to the Halifax and Rightmove themselves. So you get a different picture from different areas every single time when you actually collate all this information together. But the great thing about it is it brings together a commonality with some of the data in between all these figures, and then we can get a real good picture about where things are. Because some of the reports in isolation aren't really an accurate reflection of what the property market is right now. Classic example is Nationwide comes on and says property prices have dropped about 5 or 6%, and it's like, well, the Office of National Statistics actually are not saying that at all. So where is your data in comparison to their data? So it's quite interesting to see all these different things. But I like the Zoopla price index because some of it is actually quite factual. And Zoopla, remember, have up-to-date information in terms of the number of people hitting their website as opposed to the number of properties actually getting sold on their website as opposed to the number of properties getting actually listed on their website as well. I'm going to drill down in Chris Watkins, property guru, Chris Watkins' data as well. He's sent over some graphs which on the UK housing market as well, which will actually show a good picture about where we are in terms of numbers and statistics. After all, sometimes it's not about the property price, for the health of the housing market. It's often about the number of property transactions. In other words, the number of properties actually coming onto the market versus the number of properties actually getting sold in the market. These are the key data and key information we should be drilling down to in terms of where we are right now. So let's have a wee look at the executive summary while I put up some information. So Zoopla is actually saying house price inflation has actually slowed to plus 0.6%, but still the other side and quite positive. Modest annual price falls of up to 2.2% concentrated in the southern England and markets, with an average price in their markets of over £300,000. They also go on to say affordable markets in economically active areas still registering annual house price inflation of over 3.5%. As well as higher mortgage rates have reduced demand by 18% in the last 2 months. So higher mortgage rates have influenced this and actually made people a bit nervous. Let's jump on to the next graph. This is quite interesting as we go through. So this is it here. So higher mortgage rates have actually reduced demand by 80% in the last 2 months. A rise in mortgage rates appears close to peaking. So they think the rise in mortgage rates appears close to peaking. I'm not so sure. America's sitting at 5.5 base rates. We're sitting at 5 base rates. I think we've got just a wee bit more to go. So they're saying close to peaking. They're hedging their bets just in case. that's like, oh, it might stay as it is, or it might actually increase. But we told you because they're close to peaking. So they're likely to return. They say they're likely to return to the 4 to 5% window this autumn. I'm not very sure about that. The key risk is higher rates. The higher rates for longer. I mean, that is the key risk here: higher rates for longer. Out of the whole market itself, and how will that affect everything overall? A resumption of modest price falls expected in the second half of 2023, concentrated around southern England in response to higher mortgage rates. Well, that's no surprise. So there again, just let me reiterate. According to Zoopla, they think there's going to be a modest price falls expected in the second half of 2023, but that's concentrated more than likely into the southern England in responses to higher mortgage rates, primarily because southern England's a far higher price point than what we have in Scotland overall. They go on to say that UK house prices still on track to be up to 5% lower over 2023. That would mean it could drop quite dramatically in the second half, which I'd be quite surprised about because the Office of National Statistics don't show that information at all. They show a slightly different picture. I wouldn't say a completely different picture, but a slightly different picture, where they're actually year on year, their house prices are actually about 3.3% or 3.2%, whereas Fife, for example, is 4.8%. But Zoopla are still saying by the end of the year they should have about 5% lower. It's like, well, okay, so we're at 4.8 the now. We've got to fall quite a bit in order to get to that amount. And I just don't see that. But let's just bear with Zoopla and see what their information is saying. Okay, so this is the graph. It would actually explain a wee bit more. So performance in line with 2019 levels, they're saying it's right there. Apologies to the people on Instagram, you won't be able to see this. But if you pop over to Five Properties TV on YouTube right now, you'll be able to see this live and be able to make comments as well. If you've got any comments or got any questions, please feel free to ask, or please feel free to comment on the post as well. So they're saying market performing in line with 2019 levels. So demand is down 6%. Number of sales agreed, this is compared to 2019, is minus 1%. The flow of new supply is 2% higher. But here's the key here. See this information here. The stock of new homes for sale, and I've been saying this for quite a long time, is still historically low in comparison to 2019. And they're saying 7% on average lower right across the board. And that will continue to keep the housing market very stable and property prices stable as well. If not, some of the properties actually still going for just slightly over home report values, if not with the best property they want, maybe going exceptionally over home report values. So, what do they go on to say about demand as it falls 18% as mortgage rates spike higher? Let's look at this then. Let's drill down on this. This is actually the graph here. We'll come into that in a minute. I'll pop that off and let's talk about. So demand for homes recovered over 2023, the first half of it, as mortgage rates fell towards 4%, supporting an increase in new sales overall. Mortgage rates rising quickly over the last 6 weeks towards 6%. So this is mortgage rates with the banks and building size have risen towards about 6%, has reduced buying power and hit demand, which has fallen by 18% over the last 2 months. The decline in demand is less stark than that recorded in the wake of 2022 mini budget, or when the first lockdown was introduced. So demand has actually weakened off or a lower base and is currently running 6% below 2019 levels. Year on year demand is down 40%. But sales agreed are only 17% lower. Yet we see more committed sellers and buyers in the market. Interesting that they say that. They see more committed sellers and buyers in the market. That's what Zoopla's saying. Let's have a wee look at this graph now. Okay, so here we go. So what does this tell us, this graph? Well, this is actually from July 2018 all the way across, and it shows you all the way how things have actually spiked, the trends in home buyer demand, and how buyers have actually jumped up, and more buyers have came in terms of the average over the last 5 years at certain points. So the post-general election bounce was in here, so you can see that just in there. If you can see that. The COVID pandemic starts, so it drops like a stone. The housing market reopens, it booms right up as people realise they can work from home remotely and stay anywhere else in the country. Stamp duty holiday announced. It went up a wee bit more here, but then it started to peter off and started to come down. And buyer demand actually came down in January 2021. And the stamp duty holiday was extended and it jumped up dramatically again compared to over the 5-year period. And then it started to peter off again. And then again in January 2022, at the start of the year, buyer demand has actually gone up. That's quite traditional at the start of a January. Buyer demand goes up because it drops down towards the Christmas period, and then it boosts up on the Boxing Day bounce and starts to jump up again. And as the mini budget in September was announced, where it was all stable, it started to drop like a stone, buyer demand again, as everybody got really nervous, and it started to bring up again. So May 2023, inflation figures were released, and the buyer demand actually dropped a wee bit more. So you can see that right there. So let's talk about this. So house price inflation slows to plus 0.6%. Weaker demand and rising supply have driven a rapid slowdown in house price growth. UK house price inflation is currently running at 0.6%. That's as of June 2023, down from 9.6% in June 2022. But remember, the average price of a property will have gone up as well. So that 9.6% in June of 2022 will be factored in. There's a clear split between trends of southern England and the rest of the country. Higher mortgage rates have a greater impact on buying power in the southern England, whereas where house prices are actually highest. The barriers to first-time buyers is also greater and weakened demand from buyers who support the bottom end of the housing chain. Now, buyers and first-time buyers are actually essential lifeblood to the housing market overall because they do support the lower end of the train, which actually allows everybody to upgrade and allows that natural cycle of the house price market. They're going to say house prices are falling by up to minus 0.6% year on year. That's not the end of the world. For 4 regions in southern England as well as Northern Ireland. In contrast, house prices continue to register annual house price growth over 1% across other 7 regions of the UK, led by Scotland, where house prices are up 1.9%, according to Zoopla on their information, than a year ago. So Scotland's market is very, very buoyant still. Zoopla expects the divergence of house price growth between the south of England and the rest of the country to widen over the second half of 2023, with further modest price falls across higher value markets. Some more affordable markets may not register any price falls over 2023 at all, which I genuinely think is where probably Fife might end up. Markets with prices over 300,000 are most exposed. So they're going on to say that drilling below the regional level, it's clear that the housing market's average prices over 300,000 are feeling the impact of higher mortgage rates more than other areas. Some 4 in 5 local markets currently registering annual house price falls with an average when average house prices over 300,000 itself. And now this chart we're going to show here actually demonstrates that. So here we go. This is the chart that demonstrates this. Markets across, excuse me, starts to obviously demonstrate this. So what we're seeing here overall is the higher house prices mean that larger mortgages, bigger deposits, and higher household incomes are required to actually buy a home. Now, there's the rest of the UK and the bubbles, and there's London. So this is the house price growth. So you can see the other areas in London and the southwest of England overall. The house prices are actually registering a lot lower growth, but you can see Scotland itself over here, and when we're up here, is actually registering that 1.9% growth as well, and it's stabilising off. So there's a two-tier system happening in this market. Markets across the southeast England are leading annual price falls, it's particularly in the commuter markets adjacent to London. These are led by the southern Watford area, northwest Herefordshire, and house prices in London are falling, but to a lesser degree than they actually might be expected. Now, this is because residential values have registered very limited price growth since recent years compared to the rest of the country. So prices in West Central London are up 1% over the year. Now, that's actually quite a surprise. Affordability and strength of local economies are actually important in this whole scenario to give an overall picture. House prices are also falling in some lower market values, such as Sunderland, Aberdeen. No surprise, Aberdeen is 0.9% minus. Northern Ireland and in other areas. In these areas, the local economic factors are impacting demand in addition to mortgage rates and cost of living pressures overall. House prices actually continue to increase at above average rate on affordable markets next to major employment centres. Higher mortgage rates have less of an impact on demand for these areas. For example, it's still cheaper to buy than rent in many low-value housing markets, even at 5.5% mortgage rates. This supports first-time buyer demand as well. And the highest rate of annual house price growth has been registered in Halifax at 4.3%, Wolverhampton at 3.7%, and Falkirk at 3% overall. So this leads me on then to say asking price cuts point to lower achieved prices. So the asking price cuts point to lower achieved prices in the second half of the year. So Zoopla going to say their house price index tracks achieved prices. It's not it's not an asking price index. So it's achieved prices they're tracking. However, trends in asking prices, which they're bringing up here, provides important insight into where achieved prices are likely to move in the next 2 to 6 months. Now, they can see this overall. One of the important measures at Zoopla track is the proportion of homes where asking prices have been cut by more than 5% to attract more demand and boost a chance of an actual sale. This measure is now back at Q4 of 2022 levels, with 6.5% of homes for sale seeing a more than 5% cut in asking prices, a level that is 60% above the 5-year average. The scale of asking price cuts is greatest in southern England, where downward pressure on prices is the greatest overall because most of these prices are beyond 300,000. Now, these trends are clear sign that buyers have become more price sensitive over the last two months. Sellers need to start. Here's the key thing for a seller. If you're a seller, sellers need to start setting their asking prices at the right level if they're serious about achieving a sale. If you're currently on the market right now and you've been on for quite a while, then you need to probably consider realigning your price point to a more attractive level in order to get somebody through the door, in order to get them to offer. Because if you've got a higher price point and you're not getting somebody through the door right now, it is the price point, the initial asking price, it is the problem here. It doesn't mean to say if you're realigned to a lower value that that is the price you've got to accept. You just might attract a person through the door that might then, once they see the proposition on offer or the house that's on offer, they will actually be prepared to bring you back up to that home report value or possibly beyond. Now, this has happened before, quite often in our company as well. So it's all a strategy. It's another strategy in order to get your house sold. Now, this is one of the reasons they see, Zoopla sees, that they believe that achieved prices will continue to fall over the second half of 2023. Let's actually have a wee look at what they are saying in the graph form. And I'll just pop this up on the screen. So this is the asking price reductions continue to increase according to Zoopla since 2017. So see how that's gone down over the years, and it's been quite low. And now asking price reductions have actually increased quite dramatically to where it is now 6.7% in overall stock they've got in the market. It's also to do with a shift in the mix of homes selling towards smaller homes. One of the impact of higher purchase costs is that buyers are looking to buy smaller, lower value homes, or simply delay moving until the outlook for mortgage rates is actually lower. Sales volumes, according to Zoopla, are bearing the brunt of higher mortgage rates and are expected to be 23% lower over 2023 compared to 2022. Now, interestingly enough, Chris Watkin actually shows that as well, and I will show you a graph to that towards the end of here, which is in about another 10 minutes. Zoopla's data shows sales volumes holding up in the more affordable areas of the UK, specifically Scotland and the North East. So Scotland is actually doing quite well and very resilient in terms of the housing market overall. They go on to say that new sales of 3 and 4 bedroom family houses have been hit harder than for smaller homes with lower prices, making them more affordable to would-be buyers. Comparing trends over the last 4 weeks to the same period over the last 5 years, Zoopla actually find that agreed sales of family homes are down by up to 41%. And that's a quite surprising trend. Sales of smaller homes and flats have fallen to a lesser degree. Higher mortgage rates and rising costs, living costs, are delaying decisions to move home where people already have larger homes. In Zoopla's view, this will continue to suppress sales volumes while mortgage rates remain above 5%. So the outlook for the second half of 2022, on track for UK house prices of up to fall by possibly up to about 5%. Now, I had actually predicted this at the beginning of the year, it would rebound about 5%. I genuinely think as well, in our region of Fife, for example, and anybody else can comment on their region if you're on a stage and tuning in on this on any other region outside Fife. Fife will still be quite resilient. Our eyes could see a moderate, if not, maybe still a slight increase, if not leveled out and stable in terms of house prices. So everything's good on the Western front, as they say. Okay, outlook for 2022. For the second half of the 2023. This is where they see it. Increase in uncertainty stalls new house sales. Look at this. This is actually quite an interesting graph that they've got here. So in one bed flats, it's actually gone down by 10%, 9%. I did say the flats will be very resilient in the next couple of years. These are the prices that are actually still maintained, if not go a wee bit higher, as people look to downsize to make the rooms more easy to heat and more cost effective to heat as well. See, 2-bed houses, 3-bed houses, and 4-bed houses, they've actually gone down as well. And that's their sale. That's Zoopla comparing the sales agreed in the 4 weeks to July 2023 versus the same period between 2018 and 2022. So that's how they see the overall trend. So flats and apartments doing quite well in comparison. So they go on to say the outlook for the second half of 2023, the outlook for the market activity and prices depends on the trajectory of the mortgage rates. That will heavily influence this. And by market expectations of how much base rates will go higher are likely to increase to control inflation. So if inflation keeps going or it keeps high, base rates will probably more than likely be moved up a bit more. The latest inflation reports are starting to show an impact of higher base rates feeding through to the economy. It looks less likely that the Bank of England will need to raise rates as much as financial markets expect just over a few weeks ago. The average mortgage rate for a 5-year fixed rate deal at a 75% loan to value has reached around about 5.4% compared to 4% in the spring just past. Mortgage rates look likely to peak over the summer. The underlying cost of fixed rate finance by the banks has fallen by 0.6% over the last 3 weeks, which is actually good news. This will take time to feed through in the mortgage rates and which could actually eventually fall below 5% by this autumn. Higher rates over a longer period remain a key risk overall, according to Zoopla. So house prices started to fall in quarter 4 of 2022 as mortgage rates for a 75% loan to value fixed rate deal had actually reached 5.5%, mainly due to Liz Truss's budget, which she put in place. And then when that was put out the way, then obviously it got far better in the first half of 2023. So the recent spike in mortgage rates has reduced buying power once again. Weaker buyer demand will push down prices over the second half of 2023. This is what Zoopla is saying in conclusion. Zoopla expect modest price falls over the coming months, with UK house prices expected to fall by up to 5%. Now, this is over UK, remember, by 2023. This would mean that the prices are still 15% higher than the start of the pandemic. This is where you have to realise prices will still, even if prices drop by 5%, they'll still be 15% higher than they were at the start of the pandemic in 2019, towards the end. Even if mortgage rates fall back into the window of between 5 and 4% later this year and into the first half of 2024, Zoopla still expects house price growth to remain relatively low for the next 1 or 2 years. I absolutely cannot disagree with that at all, considering we've had such a hike in price rises, but that's more or less to catch up with it, to realign to the average salary to average price of 1 to 6, especially in Scotland and Fife, for example. House prices are likely to lag behind the growth in price and price inflation, and earnings as house prices adjust to the higher level of mortgage rates overall. Southern England and the Midlands are where the house prices and incomes need to realign the most, and very low nominal growth and modest price falls. Zoopla go on to say, finally, they expect sales volumes to remain in the region of 1 million to 1.15 million, with demographic, social and cost of living factors continue to drive the motivation to move home overall. People move home because of their circumstances. They don't move home to make money. That is very rare. So by buying a house, all you're doing is securing your place on the property market in that area, so you're not open to volatile fluctuations in house price rises or house price decreases. It just keeps it in a stable environment. We'll quickly look at this graph on the UK housing market overall. You can see the areas overall. We can zoom in and you can see there in Scotland, 1.9% growth according to Zoopla. Northern Ireland down 0.5. As you go into Middle England, and here you can see the house price rises are still there, but when you go into East England, London, South East and South West, all house prices are beginning to drop according to Zoopla. Aberdeen, 1.6% less, but that's because city centre of Aberdeen still on its knees, never recovered since the oil crisis. And average prices according to Zoopla in the Edinburgh area, according to Zoopla, remember, this is all their listings on the websites, is currently at 268,000 for Edinburgh. London, this will be interesting to see what they say for London, 525,000 for the average price, making us in Scotland still very, very affordable. Glasgow area, 143,200 is the average price on Zoopla, according to this. So it gives you a good comparison about where things are going, where average prices are, and very, very stable overall. Let's just drill down into some of the graphs that Chris Watkins done. This is actually quite interesting over the UK house sales themselves. Now, property transactions. Now you can see here, this is 2021, 2020, 2022, 23, and the average overall, which is the white line overall from 2017, 2019 in comparison to the pink line, which is currently where we are right now, and the net sales, residential sales, resi sales. So you can see overall, the net residential sales have been quite buoyant in 2021, which is the green dotted line. The orange dotted line is the 2020, 2022 is the blue dotted line, as you can see there, and 2023 is the thick pink line. But you can see still very, very stable in terms of the housing market overall over the last 3 or 4 years in comparison. National weekly listings, 2023 versus 19 versus 2018 versus 2019. Look at the number of weekly listings since the beginning of this year in 2023, right up to week 31, where we are right now, in comparison to the same weeks in the years before. It's all more or less the same. So very, very stable, same number of properties coming on the market in terms of the number of transaction volumes, which is the most important about the health of the property market, because this goes on to then produce jobs for people refurbing, for people moving in, for solicitors doing jobs, for estate agents, for mortgages and everything. So keeping this market very, very stable is the most important thing in transactional levels. Gross weekly sales agreed. This is sales agreed. Look at this. Everything's still stable overall in terms of sales agreed. I mean, a slight dip, but still very, very stable. You can see in 2023 with that thick pink line there as it goes along. And you look at all the other years before, they're almost at similar levels, give or take a few thousand, but there's nothing neither here nor there in terms of that level. It's what it compounds to over the years. So this is where we see the cumulative net sales. Thank you, Chris Watkin, for providing this information. So cumulative net sales to week 2021 year to date in 2017 was 510,000, 2018 543,000, 540,000 2019, 2020 pandemic crashed, 411, then jumped up in 2021 to 700,000, coming back in 2022 to 604,000 overall, and settling out at 492,000, just below the 2017 level, and a wee bit below, about 10% below 2018, 2019, but still very, very tolerable. 92.5% of the average of the years before this represents right now, which still tells us, overall, in conclusion, the housing market is very, very stable. And until next time, guys, I'm Jim Parker for 5 Properties TV. Bye-bye for now.